This self-learning video is created by Jagrat Creations. It is on depreciation accounting, hence useful to the students who are reading for 11 Commerce, CA Foundation, ICWAI Foundation, CS Foundation, CA-C.P.T. I want to solve one sum on depreciation accounting. Just observe the sum on the screen. I read for you. The details of machines purchased by Nanalal and Sons are as under. Book value. The books ends on 31st of March. Accounting year ends on 31st of March. Machine 50,000. Estimated life 8 years. Purchased on 1/4/2013. 60,000. Estimated life 12 years. Purchased on 1/1/2014. Machine 30,000. Estimated life 10 years. Purchased on 1/4/2014. Fourth machine 40,000. Purchased on 30th September 2014. Estimated life 8 years. Scrap value of each machine is 20% of its cost price. So 50,000 into 20%, 10,000 is the scrap value. 60,000 into 20%, so 12,000 is the scrap value at the end of the useful life. 30,000 into 20%, 6,000 is the scrap value at the end of the useful life. 40,000 into 20%, 8,000 is the scrap value at the end of the useful life. Machine costing 60,000, sold at 10% profit on book value on 31/3/2015. Now 1/4/2013 to 31/3/2015. So 13/14 and 14/15, 2 years are to be considered for accounting, depreciation accounting. Providing annual depreciation by straight line method, prepare machinery account, machine account. So straight line method depreciation is provided for. So under straight line method, equal amount of depreciation is provided. So depreciation on annual basis is equal. How to find out the annual depreciation? Purchase price minus scrap value divided by estimated useful life. Here 50,000 is the purchase price, 20,000 is the scrap value. 50,000 into 20%, 10,000 is the scrap value. 50 minus 10, 40,000 is the depreciable amount. That 40,000 is to be equally distributed over 8 years. So 8 5s are 40, 5,000 is the annual depreciation. This is how the annual depreciation for all the 4 machines could be worked out. I am required to prepare depreciation machinery account for 2 years. First 2 machines are purchased on 1/4/2013 and 1/1/2014. So first 2 machines are purchased in the first year. Third and fourth machines are purchased in the second year. That's an important point to be noticed by you. Here I am going to prepare a working note. This is for first machine, second, third and fourth machine, total depreciation and return on value. Here I am going to prepare machinery account and the annual depreciation working note will be prepared. Now I start with the sum. First machine purchased for 50,000. So on what date it is purchased? On 1/4/2013. So machine purchased on 1/4/2000 for ₹50,000. Now let me work out the annual depreciation. 50,000 minus 20% of 50,000, 10,000 divided by 8. So annual depreciation is 5,000. After calculating this annual depreciation, I'll debit this purchase of machinery in my machinery account. Machinery account debit to bank account credit. So purchase transaction is recorded. Now there is second purchase is in the same year. Machine purchase for 60,000 on 1/1/2014. I'll calculate annual depreciation in my working note. 60,000 minus 20% of 60,000, 12,000. Divided by useful life, how many years? 12 years. So annual depreciation you can work out in this working note. 60,000, 20% of 60,000, 12,000, useful life 12 years. So 60 minus 12, 48 divided by 12, 48, 12, 4s are 48. 4,000 is the annual depreciation. This is how the annual depreciation is worked out. Now let me record this purchase of machinery in my machinery account. So machinery account debit to bank account. So purchases are recorded first of all. Now these 2 machines purchased are used till the end of the year. End of the year is 31st of March. So 31st of March 2014 is the ending date of the accounting year. So first machine is purchased on 1/4/2013, ends on 31st of March 2014. So 1 year depreciation will be provided. On the second machine purchased on 1st of January 2014, it is used in the business up to 31st of March 2014. So 3 months depreciation will be provided for. Let me calculate the depreciation on these purchases. That will be worked out on the basis of this. 12 months depreciation 5,000. 3 months depreciation, this is the annual depreciation. 12 months depreciation is 4,000. So 3 months depreciation will be 1/4 of 4,000. 1,000 is the depreciation 3 months. Now this is the return non-value. 50 minus 5, 45, 16, 59,000. This is the return non-value closing balance. Now I will record depreciation in my machinery account. Depreciation account debit to machinery account credit. After that I will find out the closing balance of machinery account. Total of debit minus 6,000. So here closing balance will be 1,04,000. The calculation confirms with this working note. This closing balance becomes opening balance in the next year. This is how the accounting for the first year is done. In the second year, there is third and fourth machine are purchased. That I will record it here first of all. Then I will calculate the annual depreciation. Then on the basis of time of its usage, I will calculate depreciation for all the 4 machines. I will calculate the depreciation for the machine that has been sold till the date of sale. Let us start. Third machine 30,000. Purchased on 1/4/2014. Annual depreciation will be worked out. So 30,000 minus 20% of 30,000. So see, third machine 30,000. 20% of 30,000, 6,000. 30 minus 6, 24,000. Estimated life 10 years. So annual depreciation will be 2,400 for the third machine. After calculating annual depreciation in this fashion, let me write down this purchase of machinery to the debit side of machinery account. So machinery account debit to bank account credit. 30,000 machine purchased is recorded. Now I want to record the purchase of fourth machine. Purchased on 30th September 2014. I'll work out the annual depreciation 40,000 into 20% thereof. 8,000. Scrap value deducted from 40,000. So 40,000 minus 20% scrap value. Estimated useful life 8 years. So 32 divided by 8. 4,000 is the annual depreciation. This is how annual depreciation is worked out. Now this purchase of machinery will be debited to the machinery account. Machinery account debit to bank account credit. Purchases are recorded. After recording these purchases, I would like to calculate depreciation. Machine costing 60,000 is the second machine. Sold at 10% profit was on 31/3/2015. So 1/4/2014, 31/3/2015, 1 year. After 1 year, this machine of 60,000 is being sold. So this machine is sold at a profit of 10%. So I will provide depreciation for this second machine till the date of sale, and for this 1, 3 and 4th machine till the end of the year. Here the sales has taken place at the end of the year. So here also depreciation is provided till the end of the year. Now first machine annual depreciation 5,000. Second machine annual depreciation 4,000. Third machine annual depreciation 2,400. And this machine is purchased on 30th September 2014. So 30th September, end of the September. It has been used up to the end of 31st of March. So October, November, December, January, February, March, 6 months depreciation will be provided. Annual depreciation is 4,000. 4,000 into 6 by 12, 6 months depreciation is 2,000. This is how total depreciation 13,400 is recorded. Now this is the book value on the date of sale for second machine. It has been sold at a profit of 10%. So let me write out the depreciation account debit to machinery account. Now this machine is sold at a profit of 10%. So 55,000 into 10%, 5,500 is the profit. That will be added. So that is known as sales proceeds. For that cash is received 60,500. Now I'll write down the closing balance of all this machine 1, 3 and 4. Now the sales proceeds, machine is sold. Cash is received, bank account debit to machinery account credit. And the profit on sale of machinery will be credited to profit and loss account, and it will be debited to machinery account. Remember, when the machine is sold, the book value on the date of sale is to be credited to machinery account. Here the book value on the date of sale is 55,000. Instead of 55,000, I have credited 60,500. So 5,500 will be debited profit on sale of machinery. So machinery account debit to profit on sale of machinery account credit 5,500. So 60,500 minus 5,500. So net book value on the date of sale. Book value on the date of sale, that is to be worked out after depreciation. So 55,000 is to be credited. The difference of 60,500 and 5,500, 55,000 is credited in this fashion. So this is how the sales transaction is recorded. Now here you will get the closing balance 45 minus 5, 30 minus 2,400, 40 minus 2, and this is the total. Here I will work out the balance of my machinery account, total of debit minus total of credit. So total 1,79,500 minus this. So you will get the closing balance of machinery account, that is confirmed with the calculation. This is how this sum is solved here before you. Now I have tried to explain you this sum, wherein machinery account is prepared for 2 years. There are 4 purchases, 2 purchases in the first year, 2 purchases in the second year. There is one sales transaction, and depreciation is provided by straight line method. Considering all these points, I have tried to explain you this sum, preparing working notes and working note for annual depreciation. I think that you have followed all these things. Thanks to all of you.